Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video we'll be taking a look at two stocks, after which we'll also be taking a look at FinNifty index. For the FinNifty index, I'll take a look at what traders can do at an intraday perspective with the price levels, and also I'll take a look at what positional traders can do, whether they want to do CE selling, PE selling, and what not. For the stocks, naturally, Swiggy I will only give an equity view as it's not in the F&O market, but Paytm I'll be giving an equity point of view and an F&O point of view for the stock as to what I believe can occur in the coming sessions. Now, before we go into all of that, let's take a quick look at what I believe is the general market condition. Now, according to me, there is a lot of data points coming out this week in the international front, especially US existing home sales, CPI data of Japan, of basically UK, AU, and many places. So all that will be naturally affecting the markets. But I believe our main concern is the top we have formed. What I mean is, if you had traded last week, whether it is expiry trading, only on the expiry days, or day traded every day, or even was simply positionally trading, you would have seen one factor, that the market had completely stagnated. This is as Monday's rise, gap up, plus the positivity afterwards was so powerful that it sort of went and kept all the indexes stuck at a point. And whether you were trading the Nifty, whether you're trading the Banknifty, Sensex, or the big stocks, things did not move. We basically have stayed in the top 10% echelon of Monday's move, and within that zone we are trying to break out on either side, but not able to do so. In fact, I think when I look at Friday's range, on Thursday expiries, there was a bit of a spike. It was so tight that on the Nifty that you could literally take a ruler and draw it. So now what I think is happening, due to the market of being so positive on Monday, there's some guys, especially in the retail section, who have that FOMO feeling that they think that now they missed that move. They want to get in and stay in because they think a new move or a similar proportions might come. While on the other side, the guys who want to short the markets, CE sellers or PE buyers, are scared to enter the thing because it is so stagnant, or PE buyers are going to get whacked out because it's option buy. CE sellers, okay, they're going to earn from decay, but the risk factor stays on the back of the mind that what if it spikes again? So that is ended up creating a very tight zone. So according to me, as long as it is within that tight zone, there's not much you can do as a trader. And if you're doing CE selling and PE selling together, then use a lower volume, because at some point, I believe this week, things will start cracking downwards or upward, whichever side, but we're going to go one side. Why I'm not sticking to my thing that usually I always say which direction exactly, because right now there's a complete different picture by each other indicator. So let the box range do its talking and decide the next move. And I think the two things what everyone has to watch for the next move is Reliance Industries and the mid-cap Nifty. These two are going to be the guides for the next move. Not the Bank Nifty, not the Nifty. Bank Nifty and Nifty will only move once these two names have taken a decision on what they want to do next. I am going to be on Monday most likely entering for new positions with the subscribers on the position front, and let's see how the market opens. Then I'll take a call on whether I want to sell one side or want to sell two sides, as that's how I'm going to take a look at it. Now let's go look at the FinNifty index first, after which we'll take a look at Paytm, and last we'll take a look at Swiggy. Now coming to FinNifty index, when we look at it in terms of a positional trading view, let me get the highlight out. Now, as I said, we are basically in a box range. We are in one big box range, and the FinNifty at least gave a bigger movement. It literally traded Monday's zone, but this was not seen in the Nifty, Bank Nifty, and Sensex. Now, how I see it, in a positional point of view, the guys who have a lot of risk-taking abilities can sell Cs above this point and can sell Ps below this point. So that ends up encompassing the range that if we keep staying in this range, you'll keep earning some money rather than making no return. But the huge risk factor is going to be that if it breaks out on either side, then you're going to be in a lot of trouble, and you better Due to that, keep tight loss stops initially, and the minute your position hits profit, put a profit stop. That's how I look at it. I personally will not enter any CE or P sell in the FinNifty as of now. I want to see how the market opens on Monday and how it performs for the first half of the day. Then I will take a call. Now, when I take a look at it from an intraday point of view, let's switch to the intraday charts. I will stick to the hourly. It's not exactly intraday, but it is what it is. Now, if you see, as I had said, basically Friday's range was very tight. If we look at it, we zoom in, we see basically Thursday started here, and then it basically get up and then stayed, and Friday started basically here. We can see the Friday's range was this tight. So if we put it in terms of a simple price point, let's put it simply like that. The blue line, this was Friday's range. It was literally from 26,505 to 26,603. So whether you're an option buyer or option seller, you could not do anything on Friday. Now, for tomorrow's trading session, if it breaks 26,603, its naturally first target is 26,710, which is a very, very strong resistance. If it manages to scale that, then it goes towards 26,900 and 27,020. In between here, there's a resistance around 27,850, which I have not highlighted, but it is there, and the guys who basically will just take a screenshot, not watch the video, they will miss it. Now, on the other hand, if it breaks the support at 26,505, it will be falling down to the quant support at 26,360, 26,230. These two are very crucial. If it breaks these two, 26,050 opens up, and it breaks that 25,880 and 25,800. So, on Monday morning, if you're trading the FinNifty index, let it first get out of this range. As you can see how tight this range is. There is nowhere, if you're an option buyer or even an option seller, you're going to make anything in this range. Why is it an option seller? Yes, it might be stagnating, but the minute it breaks that, if you have earned, let's say, 10 points from your option selling, it's going to do a 30-point hit to you. So right now, let it do the decision and then take. And if you have a clear view that you believe it's going that direction, then sell that direction. Otherwise, stay out until it breaks the zone. And the position fund, as I said, it's a big box range. So one thing you can do is you can sell Cs and Ps if you believe the box range will continue. If you think it's a one-sided move, you can sell Cs. I personally am leaning towards more selling Cs than Ps because the move has been large, and I believe now it will sort of be clearing out the top of the range, give a bit more 1-2 spikes, then start trying to head to a direction. Let's see how it goes. As I said, even the FinNifty will be guided heavily by what happens is Reliance and Midcap, as that will move the Nifty, Banknifty, Sensex, and that in turn will move the FinNifty. So that's it for FinNifty. Now let's take a look at Paytm, and then we'll take a look at Swiggy. Now, when I take a look at Paytm, I look at it in one perspective, that it has got a resistance zone, number one, between 885 and 900, and then a support zone between 800 and 818. So this is something a bit more perfect for selling Cs and Ps. I personally would, if I am going to enter CE/PE sales of Paytm, I would deploy, let's say, 60 rupees out of 100 to CE sales and 40 rupees out of 100 to PE sales. This is how the chart is right now. There's a higher likelihood of it going down and the higher likelihood of the upside moves failing. Also, when we take a look at another thing, what everyone should watch, you see my trend catch indicator is right at 0. It will only fall if this trend catch indicator goes below 0. It will only rise if this trend catch indicator is able to bounce from here and turn this way. So everyone who's got my indicators, do take a keen look at what the trend catcher is doing, as that is what is going to inform whether you should go on the CE selling fund or the PE selling fund. But if you're a guy who can take the risk, C and P sales together will be a good move. Now, what if you're an equity investor? According to me, if you're an equity investor, Paytm is in a watch. Why? Number one, 885 to 900 is a very strong resistance. And let's say you buy it here or even buy it here. It's a very strong resistance, 945. So the risk reward is pretty bad. So since the risk reward is pretty bad, why deploy your thing in here? This, I believe, is right now more of an option seller stock rather than option buyers. So that's my point of view for Paytm. Let's take a look at Swiggy next and see what you should do with Swiggy. Now, the reason I've chosen to focus on Swiggy is I've been seeing a lot about, number one, Swiggy, when it IPO'd, although obviously severely overpriced, as most of the companies which are right now IPOing, the new age companies, are in India. And that has been reflected from the price. If you look at it in terms of the thing, it IPO'd, the former feeling people went up and then it's just been going down. And it's sort of now in a slow decline. So how I see Swiggy is, number one, there's bad news about it. Everyone complains that the delivery times have gone through the roof. People are waiting 1.5 hours for the orders. And so now, naturally, at that scale, not going to be able to compete with someone like Zomato unless there's a huge improvement in that. So due to that, I don't believe the next quarters will be that positive for Swiggy. From the fundamental point of view, if you're failing at the primary service of delivering on time, how are you going to operate successfully as a food operator, food aggregator? Number two, Swiggy is between, I've drawn green lines and I've also drawn my contrast in them. Now the green lines are the simple price bar resistance and support. Now there's a strong resistance at 356, strong support at 298.60. And then there's a quant resistance at 368. Quant support is all the way here. So now how I look at it, if you're an equity investor and are holding Swiggy due to some bad luck, then if it breaks 298, you better get out, because this is going to be going down to 270 and 250 most likely. If, on the other hand, it manages to stay within this zone until it clears 368, it's not considered a buy. If it clears 368, then high likelihood will touch 395 and 425. But the likelihood of that happening is pretty low, according to me, because of simply what is going on in the market for Swiggy. And number one, that, plus number two, the IPO is overpriced. So whether you like it or not, in the medium term, it will have to head towards the price that is meant for it. Now, Swiggy, I'm only giving an equity point of view because it's not in the F&O market. I wish it was in the futures and options market. This is something you could literally just sell calls and go to sleep. You can literally do that and it would be a very easy trade. Or you could be buying puts every other day and you'll be making money. Okay, this range you wouldn't, but it is what it is. So in my point of view, I'm bearish on Swiggy, and I believe sooner or later, it will be breaking below 296.80 and going to 270, 250. On the other hand, within 296.80 and 368, box and move, fake breakouts will happen. Only consider Swiggy as an investment opportunity for short term, not for long term. For long term, it's going to go down. Easy if it breaks 368, and then it can go up to the resistance levels shared. So that's my view for Swiggy, Paytm, and FinNifty. Hope you liked the video. If you did, then hit the like button and subscribe to the channel. And if you want to be joining me live in the training sessions throughout the day, then WhatsApp the number given in the description box below, and someone will inform you how to join those sessions. Thank you.